like to welcome Kamran Shahin, the Vice President of Product Development Blockchain for Mastercard. Kamran, I've been looking to even meet you personally before you even came on here. So pretty excited to have you here with us. And we will be talking about enabling safe and compliant crypto transactions. I think this is something a lot of people want to hear about, want to know about, and want to see how this is possible and why also Mastercard is participating in this and how they can contact and be part of this process. So I'm sure you're going to get a lot of questions. So be prepared. I already got a few questions on your behalf.
No.
So we're looking forward to your session. Please take it away, and I will see you at the end. Thank you.
Great. Thank you so much, John. And good afternoon, good evening, or good whatever the case may be, everyone. I understand we have people joining from several different time zones. My name is Kamran Shahin. I'm speaking to you from Mastercard's offices in Dubai. And I'm very, very glad to be talking to you about safe and compliant crypto payments today. So just a little point of order, which is that I do anticipate a lot of questions. I look forward to answering all of the questions. I cannot see the question box while I'm presenting. So the idea is that please do keep typing in your questions in the chat boxes. I will present for about 20 minutes, and then I will switch over to the chat boxes and we can go straight into answering the questions. And I'm really looking forward to see the engagement we get from the audience. So just a quick little intro about me. So I have been with Mastercard since 2018. My responsibility in Mastercard is that I work within Mastercard's blockchain and digital currencies team. I report into the global team. The global team is responsible for creating and driving all of Mastercard's blockchain and digital currency related initiatives across the world. My remit is the EEMEA region. And it's definitely been a very, very exciting time. So before I joined Mastercard, by the way, I was at IBM for a period of 10 years. And since 2015, I've been almost heavily into the blockchain space. I was a part of IBM's first blockchain task force for the Middle East and North Africa region. So I've been in the blockchain space for quite some time. Now, when it comes to Mastercard, Mastercard might be a company that most people do not think of when they think about blockchain and digital currencies. Mastercard has actually been working on blockchain and digital currencies since 2015. It came as a surprise to me as well when Mastercard first approached me about this job back in 2018. So Mastercard has been taking a very, very close and deep look at this space. Mastercard has made an effort since 2015 to really gain a deep understanding of blockchain technology. The way Mastercard did that is, first of all, to really understand the technology, we went ahead and we built our own private permissioned blockchain platform from the ground up, because we wanted to really understand what this technology could enable and how it worked at a very, very deep and fundamental level. And in the course of doing that, we developed a lot of IP. Currently, we are the third largest patent holder in the world when it comes to blockchain patents, behind nChain and IBM. And all of that knowledge and all of the use cases that we have tested within our labs have really informed our strategy. Mastercard's goal, quite simply put, is to enable safe and compliant payments using cryptocurrencies of all types globally. And we have formulated a multi-rail strategy, which we're pursuing in order to enable this. And what you're seeing right now are the key initiatives of that multi-rail strategy that we're pursuing at the moment, right? So our current priorities are, number one, we want consumers to easily be able to purchase crypto assets via cards, right? So at the moment, the crypto space, as I'm sure you've all seen and has probably been discussed in earlier sessions, it has evolved dramatically. The players that you have available in the crypto space today, it's a very, very different landscape from what it was a few years ago. And many more people are becoming interested in the crypto space. They're being attracted to it, not just by the high level promise of crypto, they're also being attracted to it by exciting new use cases such as decentralized finance and NFTs, non-fungible tokens, which have brought a whole new class of consumers to the crypto space. And these people are looking for easy ways to, first of all, purchase crypto, and then easy ways to then consume and cash out their crypto as well. And that is one area where Mastercard is definitely looking to play a role. So we've been working with some of the largest crypto merchants worldwide in order to enable them to accept card payments directly. One recent example of this, which you may have seen in the news, is that the upcoming Coinbase NFT marketplace, which is set to be launched, will accept card payments. So you would be able to purchase NFTs with cards from day one. And they're doing that as a Mastercard merchant. So that is just one example. And we're working with a lot of the regional players as well in order to enable this. Number two, for consumers, we want to enable easy and secure spend and cash out of their cryptocurrencies at all of our acceptance locations. We're doing this via a very exciting program called the Mastercard Crypto Card Program, which we're currently rolling out globally. And I'm personally looking at rolling this program out across the EEMEA region. I will be speaking to you about this program very, very shortly. Number three, in order to enable the first two things, the purchase of crypto assets and then the spending of those crypto assets, it is very, very important to be able to also address some of the risks that the risk departments within banks and that regulators and other investigating bodies see in this space. Crypto has a lot of promise, but on the other hand, there is a tremendous association of illicit activities with crypto. To some extent, that is not as big as people have made it out to be. However, there are now lots of tools available that enable the proper level of AML checks and the proper level of safety to be applied to crypto transactions. Mastercard has recently acquired a company called Ciphertrace, which is one of the leading players in terms of being able to do crypto transaction and crypto wallet risk assessment. And that is something that we're offering to our customers as well. And finally, we've also been doing a lot of work in terms of partnering with and advising central banks via informal engagements as well as formal engagements as they pursue developing their own central bank digital currencies as well. So we are across all of these areas today. And furthermore, in terms of our future plans, we're looking at to see what else we can enable. Long term, we definitely see that as the crypto space continues to evolve, as more and more regulated cryptocurrencies and government issued cryptocurrencies come online, we definitely see that there will be a need for an industry scale, global, sort of like a layer 2 payment network that allows different cryptocurrency networks and traditional payment networks to connect to each other. And that is definitely something that we would be looking to enable. Now, I would just like to spend a few minutes talking about crypto cards, right, which is currently the key vehicle to enable safe and compliant crypto payments, right? So the big idea is quite simply, for those people who are interested in consuming crypto, as I'm a big crypto consumer myself, it is definitely a hassle to, in some cases, in some jurisdictions, to be able to, first of all, acquire crypto, to hold that crypto safely, and then to, most importantly, to be able to use that crypto. What the crypto card program allows for is it allows consumers to be able to obtain Mastercards that are linked to their crypto holdings. They can then use these Mastercards for a wide variety of transactions. Basically, they can spend their crypto or encash their crypto at any one of the over 50 million Mastercard acceptance points worldwide, right? What are some of the barriers that have to date been faced by consumers when it comes to crypto? Those of you who are crypto enthusiasts might have faced many of these barriers yourselves. It depends on which jurisdictions you're in and what the regulatory environment happens to be at the time. But speaking for me personally, I have faced a lot of these myself. Number one, when I want to encash my Bitcoin for any reason, for me, it is usually a hassle, right? A lot of the crypto exchanges that I, for example, hold my assets in, there is no easy way for me to convert the cryptocurrency to fiat currency and withdraw it. Yes, some exchanges allow you to do this via withdrawal to bank accounts, but that, first of all, takes a long time. Second, it can be a little bit unreliable. Third, there are sometimes very, very heavy fees associated with it. And if you need to act quickly, that can be a bit of a deterrent, right? It's a bit of a heavy lift for anyone to do. So the ability to have a card that is linked to my Bitcoin wallet and to be just able to use the card to instantly convert my Bitcoin to fiat currency whenever I need to do so, for me personally, that would be a big draw, as it would be for many other crypto enthusiasts. Number two, when it comes to purchasing with crypto, now, as we know, cryptocurrencies come with their own payment mechanisms built into the blockchains that they're based on. And these payment mechanisms enable instant value transfer between wallets, which is instant and final and completely transparent. And that is fantastic for a wide range of use cases, particularly person-to-person use cases. However, when you're purchasing things like significant purchases, like I'm purchasing a laptop online, for example, or I'm purchasing for example, a subscription, or I'm purchasing airline tickets, then there's a whole host of consumer protection considerations that come into play. For example, what if I'm not happy with what I bought and I need to claim a refund? What if a transaction shows up that I was not aware of and I need to go ahead and dispute that transaction? That requires consumer protection provisions to be built in, right? These protections are often missing natively in the blockchain ecosystem. So while the transaction mechanisms are there, the consumer protection privileges that surround them, those are often missing. And while it is possible to come up with some of those things via smart contracts, it does involve rebuilding a lot of what already exists in the world today. And therefore, that is something that linking cards to crypto wallets can definitely solve for. From the merchant point of view, merchants, in order to accept crypto payments, typically have to set up new acceptance infrastructure because cryptocurrencies natively come with their own acceptance infrastructure. And also, a very, very important point is, aside from the technology, merchants in many jurisdictions then must need to come up with additional accounting and regulatory reporting practices and tax calculation practices in order to deal with the new crypto streams that they're coming up with. So cards enable consumers to pay with crypto and for the merchants to be paid in the existing fiat currencies that they already accept. So it sort of brings the best of both worlds. It's a familiar payment mechanism. It enables what people are already familiar with today. It allows the consumers to utilize their crypto. It allows merchants to facilitate those transactions without having to worry about any crypto-related details themselves. Right? And because the transactions happen over the standardized card networks, therefore, from a regulatory standpoint and from a risk standpoint, all the AML concerns, consumer protection concerns, and screening concerns are addressed because the transactions happen via the card rails rather than happening via the native cryptocurrency-based rails, right? And as I said, this is we very firmly believe that cryptocurrencies should be able to transact via a variety of means, use the correct rail for the job, and this is definitely one of those things that makes person-to-merchant payments, in particular, very, very easy, right? Now, consumers, in addition to being able to make payments with these cards, they're also able to encash the cryptocurrency. They're able to use these cards at ATM and withdraw cash directly linked to their cryptocurrency wallets. And therefore, this provides convenience both to them and to merchants. So how does it work, right? So quite simply put, we have launched about, I think, almost 16, 17 of these programs globally. Some of these programs are in the US, such as the cryptocurrency card we've launched with the Gemini exchange in New York. We've launched these programs in Europe. We've recently announced programs that are about to go live in the Asia Pacific. And we have several conversations happening in the EMEA region as well actually as in the African region in the early stages today. And the way all these programs have worked so far is that typically we work with licensed and regulated crypto exchanges. And we're starting to see more and more of these crypto exchanges being established across several regions. These crypto exchanges already offer KYC customers the ability to trade crypto and to hold crypto assets on their accounts. These exchanges can then work with us to enable these consumers to obtain Mastercards that are linked to their crypto assets. These Mastercards can then enable a great number of transactions. For example, the ability to quickly convert any one of your crypto assets to fiat currency and load the card up with it, pay with the card at any Mastercard acceptance point and have an instant conversion of cryptocurrency to fiat currency so that the payment can be made, and also the ability to get rewarded in crypto for the spend on the card. In order to do this, the crypto exchanges typically partner with the Mastercard issuer. There is an API integration which is involved. There's a bilateral settlement which is involved, and Mastercard is the provider of the scheme and the scheme rules that govern all of this. right? This is a program that we are speaking to, as I said, many players in the EMEA region as well about rolling out, and we're very, very excited about the potential that this can bring. Now, from the issuer perspective, right, while historically speaking, there has been obviously a lot of concern about the risks associated with cryptocurrencies, there's also a lot of opportunity, which is why we're seeing so many of these programs actually go live worldwide. Issuers have realized that, first of all, these types of cards attract a whole new brand of customer over to them. The new breed of customer, which is enthusiastic about crypto and which wants the flexibility to spend and use their crypto assets. This leads to net new revenues, and this reduces the risk of attrition of customers leaving your business to go to some other business which does offer a crypto linkage. So there's definitely some incentives there for the banking sector as well. Now, this is an example of one of the cards that we have launched at the global level. This is with Uphold in the USA. It is a debit Mastercard, and it works very much the way I have just described. Consumers are able to open an account with debit. On that account, they actually have the ability to hold over and trade over 50 different assets. This includes cryptocurrency assets as well as derivatives of commodities like stocks and gold. They're able to obtain a Mastercard that is linked and to all of their assets. They're able to convert any of those assets into US dollars and load up their card. And then they're able to spend that card just the way they would spend with any other card. And all the features that you would expect to be available with a card, such as the ability to view card details, the ability to freeze a card, change your PIN, view your browsing history, view your spend history, all of those features are available. Just like any other card, you can get the card in physical form, or you can get it as a virtual card. You can link it with Apple Pay. All of those features are available. And it becomes a very easy and convenient way for consumers to utilize their virtual assets when they need to do so. Now, I mentioned earlier that we're doing a lot of work with central banks. I will not spend too long on this. I just want to highlight that this is something that Mastercard is also doing. And we are working with central banks, particularly in 3 areas, right? Number one, there are many central banks that are considering, doing pilots. In some cases, we're even starting to see central banks go live with central bank digital currencies. Our point of view is that central bank digital currencies, in order to be really useful, need to be able to operate across a variety of payment networks and need to have wide acceptance so that they can give utility to the consumers. And so that is one area where we work with central banks, helping the central banks to design and build the CBDC in such a way that it is widely accepted and interoperable. A recent example of this is we have worked with the Central Bank of Bahamas and Island Pay to enable Mastercards to be issued that are linked to the Bahamas Sand Dollar wallets. And that works very similar to the way in which I just described the crypto card program. And in that particular context, it is enabling a central bank digital currency to have an alternate mechanism of payment to the native wallet-to-wallet mechanism that it comes with. And it makes that CBDC usable worldwide. We also have a very, very strong consulting practice. We have a payment-focused consultancy within Mastercard called Mastercard Advisors. This is over 1,000 consultants working globally, including several consultants present within the region. One of the key focus areas of this consultancy has been on the blockchain and digital currency space. And we are advising central banks as they do their exploration across various CBDC use cases, CBDC design choices, assessing the regulatory, legislative, and policy implications of a CBDC. And we're also starting to work a lot with banks as banks develop their CBDC strategies. A lot of this exploration is theoretical, some of it is practical, and in order to facilitate the practical exploration of a CBDC for central banks, we have created a Mastercard Central Bank Digital Currency Testing Platform. This is kind of like a sandbox environment where central banks can safely go and play and explore what a CBDC ecosystem might look like, what might it look like to manage CBDC supply, what might it look like to create a CBDC, destroy a CBDC, make CBDC available to consumers, monitor what's happening in terms of CBDC activity. So it allows central banks to touch, see, feel what such an ecosystem would look like in order to better inform their exploration and in order to help them to more exhaustively test out their use cases. The last thing I want to mention before we go to questions is the area of Ciphertrace. As I mentioned, assessing the risks associated with cryptocurrencies is very, very important. It goes hand in hand with enabling safe and compliant crypto payments. Ciphertrace is a leading crypto risk intelligence and compliance solution, which Mastercard has recently acquired. And Ciphertrace is a big product in terms of the number of features it offers. Particularly in the context of the crypto payments that I've mentioned, there's a few key things that Ciphertrace enables. Ciphertrace maintains a running database of all the crypto exchanges and wallets that exist globally, and it maintains a ranking of those crypto exchanges and wallets in terms of their KYC procedures, how strong those procedures are, how well they're ranked in terms of AML compliance, how well they're ranked in terms of sanction screenings, and basically for banks that are looking to partner with crypto exchanges or enable transactions for crypto exchanges, this is one very, very good source to get a rating for that crypto exchange to see whether it is a credible partner, right? So that's one of the things that Ciphertrace provides. Ciphertrace also has the ability to calculate a very quick risk score for any blockchain wallet. And Ciphertrace can do this for over 900 cryptocurrencies that exist today, with more being added all the time. So when you're making a decision as to whether to associate a card with a given crypto wallet, one of the concerns that regulators and banks have is, what is the source of funds in that crypto wallet? Were those funds cleanly acquired, or were those funds acquired through illegitimate means? Ciphertrace has the ability to do exhaustive blockchain analysis and to assess how safe a blockchain wallet is before we go ahead and associate a card with it. And this can be done both at the time when the card is initially being handed out. It can also be done at each and every single transaction, because cryptocurrency moves in and out of wallets. And so therefore, in order to act as a deterrent against AML activities, Ciphertrace is a key enabler of this. The blockchain world is fully transparent, and Ciphertrace basically gives organization to that transparency and presents the information in a way that can be easily consumed and leveraged by regulators, banks, and by crypto exchanges as well, right? So that is what I wanted to cover very, very quickly today. We have about 6 minutes left. I am going to come to the questions panel now, and I will just take a very, very quick look to see what some of the questions are and attempt to answer those. Okay. Wow. Okay, good. I like to see a lot of questions. Let's see what we've got here. I understand there's a Q&A tab. I'll look in the discussion tab very, very quickly first. So the first question is from Anthony, and he's asking, who are the main regulators on the African financial payments market space? Could you give us some names? So the main regulators first of all, the main regulator of question for any one of these payment solutions is obviously the regulator of the banks. So we're talking about the central banks. Wherever we have launched these crypto cards, we have done it with regulator approval. In this region, like I said, we have yet to launch a crypto card, but we have several conversations in advanced stages. And before we launch a card, a key part of the approval program is actually going ahead and getting the regulator approval to do so. So we are in contact with just about all the regulators in the region at various stages of discussion about this. And we will not proceed with this until we get regulatory approval to do so, obviously. Then in the same question, there is a question about who supports the volatility of crypto. So in the current crypto card construct, right, the volatility of the crypto, the risk of the volatility is borne by the consumer, right? So the consumer is the one that is holding crypto assets. They're holding them with a crypto exchange. The bank that is provided to the card that is provided to the consumer is a fiat currency card. And the crypto is converted to fiat currency before the rest of the transaction is processed. And the conversion is done by the crypto exchange. So on the part of the bank, there is no crypto risk or volatility risk in this particular scenario. The volatility risk is with the consumer, and the consumer is aware of that risk going into acquiring a crypto card and using it. Right? Then the same question talks about there's some level of concern with the progress made in quantum computing and its potential to break current secure cryptography methods. is this not a concern for the security of blockchain technology and attendant uses? It is actually a concern. And but what I would say is that the pace at which quantum computing is evolving, at that very same pace, new cryptographic techniques are evolving as well. You already have in the market design patterns of blockchain solutions that are to some degree quantum secure. And that is with respect to the size of quantum computers which are available today. So for example, while I was at IBM already at that time had a design pattern to deploy a blockchain solution based on certain IBM security technologies, which were resistant to the kind of quantum attacks that could be done with the most powerful quantum computers available at the current time, right? And there is a lot of research happening in this area. This affects not just the blockchain space, this affects anything to do with cryptography across all payment networks. Okay, I'm quickly going to shift over into the well, there's a lot of questions over here, and let me quickly switch over to the Q&A panel. So, are there organizations which use cryptocurrency in Africa? So, there is a lot of cryptocurrency usage which is happening in Africa amongst individuals. There are more and more crypto exchanges which are being set up, which are based in Africa itself. I think one or two of them might actually be speaking at this event today. And then people in Africa have access to the global cryptocurrency exchanges which are available outside of Africa. And we know this from talking to exchanges like Binance, exchanges like KuCoin, Coinbase, Kraken, that a lot of their customers actually, because they do KYC, they actually come from the African jurisdictions. So there's a lot of cryptocurrency usage happening in a lot of the African countries, which we know for sure. In fact, in Middle East and Africa, some of the biggest consumers of cryptocurrencies, based on the data we've seen, actually are in the African region, right? One of the benefits of crypto is the near instant settlement times, right? So is Mastercard working on anything when it comes to the same consumer protections? So that's a very, very interesting question, right? You have instant settlement as one type of settlement. You have deferred net settlement as another type of settlement. And there are advantages and disadvantages to both. For consumer protection and for executing conditions of contract, particularly for certain types of business-to-business transactions, you need deferred net settlement. Like even if you design a solution on blockchain, most of the solutions wind up being deferred net settlement solutions where you're routing through multiple blockchain wallets instead of direct wallet-to-wallet transfer. Instant settlement is also suitable for certain other scenarios, right? So if you're making a person-to-person remittance, you're paying a small vendor, you want that to be cash-like. You want it to be instant and to settle instantaneously. And so you have to make the appropriate design choice. The important thing is to have both options available. Right? And I will be sharing the PPT, and I will stop there.
Kamran, I told you, right? There's tons of questions for you because, you know.
I love it. I absolutely love it.
Waiting for you all day. So, but you can continue the question after we go backstage.
Sure.
You can continue answering questions from a lot of folks who want to talk to you. And I think it's important to share as much knowledge, you know, coming from an organization like Mastercard about what is happening either in the semi-regulated or regulated space. And again, help to, you know, create the confidence and, you know, reality needed for a number of people who are getting into these spaces via their digital assets or digital values as well. So it's really exciting to see what you guys are doing in that space. And I will be picking up a personal conversation with you later on. But yeah, thank you very much. It has been a fantastic learning session from you. And I'm sure the questions will continue flowing. And we'll see you again soon.
Thank you very much. All right.
Thank you, Kamran.
Thank you, everyone.